Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. I'm really excited about today's video, and the reason I said that is because I want to go over ETFs, and I've been getting a lot of questions about why I actually invest in individual stocks and not ETFs, and I want to address that question first of all. And also I want to talk about a new ETFs that has come to the market over the last few months, and add a couple of more that existing ones, and I'm going to explain all of that. But before we do all of that, as always, please help us by joining us on the Patreon account, where you get access to a lot of things, and it will cost you about 15p per day, inshallah, and you get a lot of things out of it, inshallah. Just try it out for 1 month and then we'll see from there. Now, going back to the point about ETFs, okay, so I've been getting questions regarding why are you buying individual stocks, why are you not putting a lot of your money into these ETFs that exist. They are Shariah compliant ETFs out there, you know, why don't you actually put all your money in there? And I'm going to explain that in a second, okay, because as you know, I only have one ETF and there's not much in there. It's about £200, and if you've seen me in the last whatever months, I've kind of neglected it. I've left it there, but it's actually up 12%, which is quite nice. Now the expense ratio for this one is 0.4, okay, so 0.4%. So, and I'll explain all what this entire thing means in a second. So the expense ratio is 0.4, and in comparison to the S&P 500, which basically, for example, is SPY, if I show you a SPY, is 0.09. So this is way more expensive than this. And of course we can't buy SPY because SPY is the entire S&P 500. It includes all type of companies in there that do a lot of non-Shariah compliant stuff. So right now I have over 105,000 pounds in this portfolio. And if I was to put all of that money in these ETFs, what would it look like? So I'm going to explain all of these things before we get to the ETFs that I want to talk about today. And that is just using this expense ratio impact calculator. Let's just say you started investing right now and you just added £1,000. Okay, I hope you can see. You can zoom in if you can't see it. It's hard to fit in all of it into the one page, right? Let's say annual investment, just let's say 12,000. So you add in £1,000 every single month. The expense ratio, so the annual expected investment return, which is basically what the S&P 500 returns, okay, on average is 7 to 10%. We'll go down, we'll just go up about 7%, okay? So that's what we expected from our return on investment, okay? The expense ratio right now, we've seen is 0.4. Okay, so that is basically percentage. That's basically what we are paying for. And investment duration, let's say we got 20 years. We want to take our money out basically in 20 years down the line. If I press this button, we now have £474,000. Okay, so closer to £480,000, and we are paying £21,000 for that investment. So investing in this ETF for the next 20 years, again, remember, we're getting 7% an increase every single year for our money, and we invest in £12,000 every single year. So £1,000 a month, that's basically what we're going for. Now let's have a look at the breakdown. Year one, okay, the expense ratio will be only $4, and that's why a lot of people think, okay, it's really not a lot, okay. But then following year, because we now moved on from the starting balance, the end balance of 13,000 to 25,000 because of the compounding, and because we've added a bit more money into the account and so on. So the cost now is basically, the cumulative cost of this whole thing is £56, and it goes up and up to £21,000 to dollars, whatever. Okay. And this is the reason why I always say to you, basically some of these ETFs are very expensive. Now, let me just show you. Some of these ETFs have 0.55%, okay? And let's do the calculation. The ones that we're going to talk about today, some of them have a 0.55 in terms of expense ratios. 28,000. In 20 years down the line, you would have paid about £29,000, okay, of basically that money, of your money, into basically keep it using these ETFs. Now let's compare this with the S&P 500. Okay, we said 0.09 is basically the expense ratio for the SPY ETF. We're doing exactly the same thing. We expect the same sort of return, but let's see this. Okay, we're only paying less than £5,000. And this is why I always think about ETFs. Like, for example, first year you're paying less than $1, for example. Next year you're paying about $13. I don't mind that at all. Okay, and if in 20 years down the line, I'll give you the money even in advance for the 5,000 right now to actually have this sort of a return. Okay, right, to after basically 20 years. But not £28,000 or closer to £30,000, which is basically what we're paying for. So if I say the one that we're looking at today, we're gonna end up paying almost £29,000. That's way more than £5,000. And this is the reason why I keep saying, inshallah, there's a lot more ETF coming in the market. There are a lot, players coming to the market as well. So the more these things start happening, hopefully the cheaper they will become. Right now, there's a couple of those ETFs that are now 0.3. So iShares, which is quite good company, I really trust them. I think I like them better. Okay, 0.3 is very realistic. So let me just quickly show you. You're paying about 16,000. Again, that's another £11,000, dollars, whatever, more than what you would have paid. Okay, but at least it's decent. Let's now say I sell everything that I have in my portfolio. Okay, and I put everything into this ETF, and I'm actually gonna max my ISA account for the next whatever year. So I'm gonna do $20,000. And I'm going to reduce this to, let's say, 15 years realistically. So next 15 years, I want to invest £20,000 or dollars, whatever. That's my initial investment. I'm paying, basically expecting 7% return. And I put all my money into these ETFs. And I'm going to press calculate and watch what happens. I'm paying 23,000. Okay. But now I have 768,000. This is slightly, okay, a bit more realistic than the other ones. Because look, the 50... This one here, you're paying double, $42,000, which is absolutely crazy. So that is the reason why I think, okay, it will be better to actually invest in these ETFs. Hopefully, by the time in the next 5 to 10 years, I'm expecting a lot more in the market. This expense ratio to get to at least 0.1, if not 0.0 something. Okay. By then, hopefully, we can just relax about it and we can just invest in the long run. So this, I just wanted to show you really genuinely what we are doing here in terms of ETF. So if I put everything into the right now, I would be paying way more than I would basically other people are paying for the non-Shariah compliant ETFs. So for now, I'm happy to keep doing this. I will add some ETFs, and basically in the next 5 years or so, I will be buying a little bit more or basically ETFs as we go along. So inshallah, that's the plan. Now let's talk about the 4 ETFs that I want to talk about today. And all of these ETFs is owned by this company called SP Funds. And I've watched a couple of videos about the company and the people that are involved and so on. Again, they're making sure there's no alcohol, gambling, pork product and so on in their funds and so on. So if you want to learn more about it, just go to their website. Now, this is the first ETF we're going to talk about. This is actually quite new. It's only started November of 2023. So it's only about 8 months old. And so, okay. And as you can see here, we've got 35 million in basic asset under management. So AUM is asset under management. And expense ratio of 0.55, a year-to-date performance of 36.7%, which is really good. But remember, since November, the markets have gone up so much. That's probably why. And also, the top holdings are the big boys. Okay, we're talking about Nvidia, Taiwan Semis, Microsoft. Especially these two have been killing the market. ASML has done really well. Broadcom has been absolutely amazing, and so on. So 65% of this ETF is the top 10 basically. Okay, and I don't like this. I don't like the fact that a lot of the first top basically top 5 is almost the 7 to 14%, which is really huge. I like when the ETFs have about 2%, 3% each, is well distributed when it comes to weighting side of things. So that's the first one I wanted to share with you guys, and it seems to be brand new. The performance is done really well. Expense ratio, again, like I said, is quite expensive right now, but in the long run, hopefully this will come back down. The next one is we're looking at is SPUS, which is basically it has been around for quite some time, since 2019. In fact, 635 million in terms of asset under management. Expense ratio 0.45, which is not bad at all. So it's better than this one. Okay, 0.45 what it is. Year-to-date performance of 23%, and it has a basically dividend. This one has a dividend yield, by the way, as well, and this one has a dividend yield of less than 1%. And look at it again, top basically companies is still again very, very heavy. Maybe when they do rebalance it, this will come back. Maybe they will bring it down to maybe 5% or so. I would like that in terms of the weighting side of things. But Microsoft, Apple, again, really the big boys, Nvidia's, Amazon's, Meta platforms, and you might be looking at some of these ETFs and thinking some of them are not Shariah compliant. Now, what these companies do, they, in terms of ETF side of things, they don't look at the individual. Of course, they take out companies that sell gambling and pork and all of that stuff, right? But the other companies that are left in here are companies that are basically Shariah compliant or questionable in a way. What they do then is to make sure the entire ETF does not have companies that have they treat it as like a one company, and then they apply the ruling. So no low business side of it for less than 5%, the interest-bearing securities, interest-bearing debt, and all of that stuff basically do exactly 33% or 30%, whatever. So that's exactly what they do. Next one is SPRE, which is basically the REITs. Okay, so this one is the REITs. And as you can see, it started in 2020, so it's been around for a few years now, about 4 years now. 117 million in terms of asset under management. Expense ratio of 0.55 is actually done not well at all, about 4% down. Remember, the entire REITs are actually down this year, and the reason real estate investment trusts, they're all down, and the reason is because of interest rates have gone up. So for that reason, they've down. But they have an excellent free base, actually yield or distribution or dividend yield of 3.68%, which is quite good. And these are the companies that are in there. And again, top 3 very, very heavy, top 4, and then the rest of them about 4 or 5%. So 75% is basically comes from that. Although I think there's about 20 companies or so, so there's not a lot in there, but top basically 10 are 75% of the entire ETF. And the last one is one that is actually new to this whole thing, so it's very new. So it's the world one now. It started 2023, so December 2023. Asset under management just over $18 million. 0.55 expense ratio is done well, so 14% up, and you will see why, because a lot of these companies are some of the high flyers. Distribution yield of 1.38, and as you can see again, basically Taiwan Semi is about 13.5% of the entire ETF. The rest of them about 3%. This is what I like. I really don't mind that at all, but this is too much. That is really bad. And the fact that even this one here as well has done the same thing. This one has done the same thing. This two, I don't like that at all. So it would be nicer. But 33.5% basically comes from the top 10. But there are really some good companies. Okay, I like Taiwan Semi, Novo. I like this company again. Really expensive right now individually, but if you bought it through this, it would be absolutely amazing. ASML, Nestle, for example, and AstraZeneca. These are basically what they picked is the top companies in every single country, if you like, and they put it together in that ETF, which is quite nice. Now we have an issue here. This is amazing, okay, but for us in the UK and in Europe, this is not accessible right now. This is based in the US right now. So two things I'm hoping for in the next 5 to 10 years, InshaAllah, is for this type of ETFs to become available in the UK, just like Halal has done it so far. We've got the iShares, basically ETFs. Okay, so just to quickly show you, so we've got the iShares, we've got Halal and so on, ETFs. We also have the HSBC ones as well. So if you're interested, do a little bit more research. I've done a couple of videos, I'll link them here. Okay, but hopefully these ETFs will become available in the UK and at the same time we would hopefully have a basically lower expense ratio, because one thing we cannot do is basically this. I will not be doing this. I will not be putting all my money into this one or two ETFs that has a very expensive ratios, okay, and pay about over 20,000 US dollars basically over the period of time of, I don't know, 20 years or whatever. So that's what I wanted to share with you guys. And again, it's not a financial advice, any of these things. Please do your own research and find out more information. Like I said to you guys, I'm happy to keep buying individual stocks for now. Hold on to the one or two ETFs, inshallah. And then in the long run, move everything away from the individual stocks into ETFs. By then, hopefully, the expense ratios will come back down. Even if it gets to 0.1, that will be really better than actually paying what we're paying right now, which is quite high. Okay. Anyway, that's my opinion. That's what I wanted to share with you guys. Have a wonderful day. Assalamu Alaikum.